All right, and then to that point, let's go to sector spotlight, which is going to be banks, because, you know, the markets cannot trend higher without the financials. Evan, am I correct in assuming that?
Yes.
Okay, so if we look at the XLF up about, where am I today? Sorry. Actually, we're doing gold right now. Okay. My bad. Sorry, we're going to go to gold. We're going to get to banks, so don't worry in just a second. But we're going to start with gold because, again, the same thing. You need gold to go lower for these markets to go higher. So it's the same argument either way, actually. So gold's kind of treading water on that $1,800 level. What kind of direction are you seeing for the GLD?
Well, at this point, let's take a look here at gold. If we look at the chart, you can see we had a little bit of, what we call the parabolic curve, where you can see the move from July into August. Really aggressively bought here. The turn up was almost vertical at one point. Usually this is a sign that you have a near-term top and the trade is probably over. You can see the last week we saw a really aggressive sell-off. Volume came up. Friday, Monday, Tuesday, we saw a little bit of a snapback. I think we're at a really interesting point here in gold. And I would be very, very careful about being a buyer here. I do think we could see another trade back down to the 50-day EMA. Into this area.
So would you be looking at short then?
I personally would probably look at gold as a short in the next couple of days. We'll see what happens into the end of the month. But you definitely, this type of impulse down generally can lead to another type of impulse of down.
Now, it's interesting that you mentioned a short position because we saw on Monday, we opened up 20, then we were down 50, then we were up 10, then we closed down 5. So that says to me maybe it's not a good safety vehicle for an investor right now, but a really good trade.
Gold has been a great vehicle for many, many years. And like all things, good things do come to an end. I'm not saying this is the end of gold and it's going to be a disaster, but I think you have to be very, very careful at these levels. You don't want to chase this trade. If you're chasing this trade, chances are you're going to put yourself in a scenario where the risks far outweigh the reward. And I think that's where we stand right now with gold. If we look at silver, just on that note,
right.
When silver back here in March and April, it almost looked identical. You can see it straight up, but when it broke really, really hard. And while they're different trades, I think the market is the market and the psychology will always be the same. So I would be very, very careful as a buyer here in gold.
And then what about silver? Is the same kind of thing? Do you want to be cautious or does it make more of a sexy trade? Because it is starting to move a little bit. We've been stuck in this range of 38 to 42 for a while, it seems.
Well, I think with silver, the trade has been very, very sloppy. A lot of ups, lots and downs, lots of ebbs and flows here. I wouldn't be a buyer of silver at these levels. I would probably wait for a larger pullback to possibly the lower end of the range if we could see that trade into the mid to low 30s.
Now it's interesting because a lot of strategists I talk with are calling for a multi-month correction, kind of what you said, you don't want to get long at these levels, don't chase. But there are some data points that support probably some stronger physical buying. I just want to point to two today. Bloomberg said that purchases of gold jewelry, coins, and bars could climb to 250 metric tons in India this season. That's huge. It outpaces last year. And Reuters reported that their channel checks of gold dealers in China in August says business was booming despite prices that are nearly, $1,900 here. So I think that perhaps some fundamental people forget that it's also a physical metal that people buy just to hold versus a trading vehicle.
Yeah, I mean, gold, gold's different in the sense, in silver in that regard. But again, let's focus on what the market tells us and the psychology of the marketplace. We've seen this before time and time again. This is a pattern you have to be very, very careful of. And our business is always built on the concept of risk and reward. We want to look to buy these things in the hole when the risks are less. Right now, to me, based on what I'm seeing and the psychology of the marketplace and the speed at which the trade is moving, it's not for anybody but a short-term trader right now, and the risks far outweigh the rewards.
Fair enough. So gold, not that safety play. I was thinking about that yesterday as well with all that volatility. Okay, we'll be right back with more trades. Yes, we will talk about banks and some quick ways to make some cash right after this.